Hi, everyone. Thanks for joining us today on our COVID legislative updates webinar. We're going to give some more people a couple more minutes to join, and then we'll go ahead and get started. All right, we're going to go ahead and get started. So welcome everyone to the TJS Deemer Dana COVID-19 legislative updates. We want to thank you for taking time out of your day and joining us for our 1-hour webinar. Today we're going to discuss the impact on the Paycheck Protection Program from the Consolidated Appropriations Act. This act was signed into law end of December of 2020. And really this act was enacted to provide further emergency assistance for individuals, families, and businesses who were all affected by COVID. So a little bit about TJS. Most of you are already familiar with our firm, but for those of you who are not, a brief overview. We were established in 1945. We have 5 offices currently, 1 in Savannah, 1 in Dublin, and 3 in the Atlanta area. We have over 130 team members, of which over 40 are CPAs, and our service lines include audit, tax, and technology. So the presenters today will be myself, Dani Ashley. I'm a tax manager in the Savannah office. Justin Wyatt, he is an audit director in the Dublin, Georgia office, and Tracy Sharkey, she is also in the Dublin, Georgia office. Brief disclaimer, definitely be sure to review this material with your trusted advisor before taking any actions that we go over, actions on information we go over today. The Treasury, IRS, SBA, they're giving weekly, if not daily, updates on this information. So before taking any actions, definitely check with your trusted advisor. And here's the agenda we'll be discussing today. So we're going to start off going over the original Payroll Protection Act program, PPP. We're going to discuss the changes to the program from the CAA Act, the first and second draw of the PPP loans, changes to the forgiveness process, and the impact on taxable income and expenses. And to start us off, Justin is going to go over the original PPP program.
Thanks, Dani. Yeah, we're going to take just a couple of minutes to go over the high points of what originally the Paycheck Protection Program looked like. And just kind of on a side note, probably not since the days of Sesame Street has the letter P gotten this much attention. So in that vein, this slide will be brought to you by the letter P. So here we go. The program was initially instituted to help small businesses and businesses of, businesses, non-for-profit entities with up to 500 fewer employees to navigate the difficulties that they may have seen due to trying to stay open during the COVID crisis that we are still navigating our way through. The initial wave of funding was available through August 8th of 2020. It was, like I said, it was made available for businesses and certain non-for-profits with up to 500 employees. The program was designed to reward businesses for the proper use of the funds they were rewarded by allowing for 100% forgiveness of those funds as long as you used it to meet the certain payroll and operational expenses that were outlined in the original act. Now that went through many changes and iterations through the early acts to the early life stage of the thing. So it's evolved and grown, and now we're going to get into what it looks like now as we move forward through the presentation. Like I said, the level of forgiveness that you're given is based on a bunch of formulas that I'm sure Tracy will get into later as well. And now it's some high-level statistics about the first round, and what would a presentation by a bunch of accountants be if we didn't have some numbers for you. So basically, the first round, there were about 3.9 million loans that were issued for about $525 billion. There are roughly 1.3 million forgiveness applications that have been submitted for about 170 billion as well. So, the last numbers, there are approximately 65 to 75% of the borrowers who are out there who have yet to be forgiven for their PPP loan from the first wave. So moving on to what type of loan is a PPP loan? This is where they kind of ask the audit guy to step in. This was a little bit easier for me to explain. For your financial institutions, these PPP loans are no different from any other loan they originate, as far as the way they account for and the way they track them internally. However, there are some vastly beneficial differences for you and for them as well. For one, there is no collateral required. There are also no personal guarantees. So these loans are fully unsecured. However, the risks to the banks are alleviated through the guarantees that are offered by the SBA. These funds are fully backed by the government through the SBA program. Pardon me. The payment process for these, you have your 24-week cover period. Once that timeline has expired, your payments are then deferred for 10 months after that. Now, once those 10 months have expired, if you weren't granted forgiveness through the SBA, then at that point, your PPP loan clicks over to what would be a traditional loan that a bank would hold for any other business, just at much more favorable terms. As you would know, as you signed your agreement, the rates are 1%, and it's a 5-year fixed term for that maturity payment stream. So like I said, it's a normal loan in the sense of your bank carries it like they would any other loan. It's just kind of a much more beneficial term for you as a borrower. So as you move forward, what are your options for obtaining a PPP loan? Your first option should always be your primary financial institution. Whoever it is that you use for your everyday business is going to be the best place to start with. They know the most about your business and are going to be the best suited to be able to help you. Now, through our firm works with financial institutions on many different levels, and there are many who have just elected not to participate in offering these programs for whatever reason. So if your bank is one of those institutions that aren't offering these loans, there are many that are out there that are doing it. There are the larger institutions such as Wells Fargo, Chase, Bank of America, guys like that. There are also kind of, if you're not interested in the really large institution, there's those regional style banks. The ones I know we have up around here in Georgia, you've got Regions Banks and Ameris, those kind of guys, they're offering these as well. And then your next option, if you want to keep it in your community, just because your bank may not be offering these programs doesn't mean others in your area aren't. So always, if you want to keep it local, check with your other institutions in your area to see who's offering these programs. Another option are your non-traditional, quote unquote, kind of sources for these funding. They're offering the PPP applications. You've got resources such as On Deck, Cabbage, Intuit, PayPal that are accepting applications and are offering these services to people who are interested in going through those avenues. Another option, and just to make a note before you try to frantically jot down any of these links, we will be sending out these PowerPoints to anybody who's on the call after we're done. So there's no need to frantically jot down any links or notes that you may see throughout the program. But another tool that is available that the SBA has developed, you go to this link that is included on the slide. You give it some information about yourself and your business, and what the SBA does, it kind of checks this database of who's available and who's offering these funds, and it'll try to match you up with somebody who may be compatible for you to be able to take advantage of these programs.
Justin, I'll add to that. We have seen, and the SBA has not made this a secret at all. In fact, when they did do the second rounds or open the program back up just recently, is they started with the smaller lending institutions and then went to community banks. And then just recently in the last week or so, they've opened it up to the larger institutions. And we've experienced, our client base has experienced a lot of success using the smaller institutions. Things seem to happen or get pushed through the SBA a lot faster. And again, that's been no secret from the SBA standpoint. They've really pushed that. And the tool, even if you're having trouble finding a local lender, that tool is something new that SBA put out, and it will help match you to a lender in your area. Here we go. Slides are dragging a little bit. So to be able to address what happened on December 27th, and our firm and the folks inside our firm have been fast and furious trying to digest this. We actually spent close to 5 hours just last week in a training session. So we're trying over the next 30 minutes or so to kind of condense this information down as much as we possibly can and present to you what we feel is one of the biggest parts of the bill, and that revolves around these PPP loans. So again, the PPP loans have been in place, like Justin and Dani mentioned, since early last year to combat the downturn in the economy that was caused by the coronavirus. So with the bill that was signed into place on December 27th, Congress allocated about $285 billion more to this loan program. And then they additionally put in some very key provisions that changed the original program. Now, as of last week, because I know a lot of questions that we're getting around this is how quickly do I need to apply and how fast is this money going to go? So as of last week, I think about 12% of that $285 billion has been used so far. The program is going to end on March 31st, so there's not a very big window to apply. There has been rumblings that possibly if the funds are not used up, they might extend that, but we can't make that assumption now based on the information that we have. So right now, March 31st is our drop dead date to get those applications in and be approved for these loans. The new act opened up, like I said, the entire program again. So it allowed anyone who received a first loan to get what they're calling a second draw PPP loan. And additionally, there's a lot of businesses out there that didn't take advantage of the program originally. And so it's also opened up for as a first draw loan. So if you have not obtained a PPP loan originally, you can get a first draw loan now. All right, let's talk about who's eligible. So, we're dealing with SBA, so the Small Business Association. So in order to get a PPP loan, there's some caps in the number of employees that a company can have to be able to apply. So that's your first hurdle that you have to look at. So if you're looking at this program for the first time, you have to have less than 500 people to apply for what we call a first draw PPP loan. If you're applying for a second time, this is what this act did change. They reduced it down to 300 people. So if you are getting a second draw loan, you can have no more than 300 people. So first hurdle that you have to get over to consider applying. If you are in the accommodation and food services business, which would include anybody that has a NAICS code that begins with 72, there are some special rules. So for example, if you are a franchise of restaurants that has multiple locations across the Southeast, you can be able to count each individual location. So you might have 500 employees, but if each location is less than 300, then you would apply and be approved for a second draw loan. So again, if you're in that special classification, food services or accommodation, you've got some advantages there if you do have over 300 total employees. The second thing that you have to do to apply for these loans is when you sign your application, you must attest that the loan is necessary to support your ongoing operations. Now, there's a couple other businesses that were added in with the act that was put into place in December. The 501c6 organization, which is a type of a nonprofit. That would be any organization that's promoting business such as a chamber of commerce. The 501c6 entities such as lobbying or political campaigns are not included in this. Some other entities, broadcast news organizations, housing cooperatives, some of the other specific type companies that they mentioned in this new act. Also, if you took advantage of the employee retention credit in 2020, if you use that to help fund your payroll, which is a credit that's applied for through your quarterly reporting, you were not allowed to do a PPP loan. They took that off the table. So now you can do a PPP loan and the employee retention credit together. Now there are some rules we'll talk about in just a minute as far as the payroll costs that you can use, but you have the ability to access both of those programs. A few of the entities that will not be eligible, if you were not in business as of February 15th of 2020, the PPP program is not an option for you. So if you just started your company, say in August of 2020, again, the PPP is not an option. You had to be up and going on February 15th of 2020. All right, talking about the first draw PPP loan. So this is anybody this is the first time you're accessing the program, but then also we're going to discuss the first draw loans that you think there might be a potential that you should have gotten more money. So for first time companies that are drawing on the PPP loan, the formula is 2.5 times your monthly payroll costs for the 12-month period prior to your loan application or 2019. So if you're applying for the first time today for the PPP loan program, you can look back at your 2020 payroll or your 2019 payroll and calculate the average monthly payroll. Whichever year is higher, that would be the year you would select to calculate how much of a loan you can actually get for the PPP program. The maximum amount, they've set it at $10 million. And then make sure, this is important as well, if you have related companies, so if you're part of a group that has common ownership, you need to make sure in your application to indicate that, because SBA does want to track and make sure companies aren't hitting any of these limits like the 10 million mark or going over that limit as a group or an aggregated group. Now, one of the really important things that came through, so when the PPP program started in April of this past year, there were just a lot of questions that revolved around the program and how to calculate these loan amounts. And as it progressed, and even up until this point in time, the SBA has gotten a lot better about getting out the information and clarifying any questions that we might have. But early on, people who applied, they found out later on because of additional clarifications, they might have gotten some more money in that original draw. And in the next slide, we'll talk about who those people are and what you can do to go back and get that additional funds for that first draw. Also, one thing that they clarified that wasn't exactly forthcoming was seasonal businesses. So if their definition for seasonal business is an entity that does not operate for more than 7 months in any calendar year or had gross receipts in any 6-month period in a calendar year that were not more than 1/3 of the gross receipts of the remaining 6 months. So there was just tons of questions about how to calculate that. So the CAA 2021 Act that got put in place defined who those seasonal employers or what they were going to, how they were going to be able to define them for this calculation. And the calculation that they can use is they look back between a certain time period. So it's February 15th of 19 between February 16th of 20. And that seasonal employer can pick the 12-week period that is the best or the highest payroll, monthly payroll for them in order to calculate their loan amount. So again, that was an additional clarification that came through in this act that was just put in place. All right, the increases to the first draw loans. So again, talking about the people that applied early on and then realized at some point in time, I could have gotten more money if I had known that the SBA was going to consider this. So there's three specific areas or companies to consider this. Now, I'll say it first, if you've already applied for forgiveness, you've submitted your forgiveness into the bank and onto the SBA, this is off the table for you. So, but if you're still sitting with your first draw loan and you have not submitted forgiveness and you are a partnership, and when you applied, you did not include the income that's reported on the K-1 for the partners, you could go back and resubmit for an additional amount. Now, the other rule that you have to follow is that when you resubmit for this additional amount, you have to go through the lending institution that issued your first draw loan. Not required for second draw loans, but if you're going back and want to get an additional amount, you've got to use your original institution that issued the loan to you. And again, just as the second one is the seasonal employers. So a lot of questions revolving around seasonal employers when these loans first came out. And so there was a lot of guessing when these applications were turned in across the board with these financial institutions. So now that there's a lot more structure around that, if you were seasonal, you can go back and request additional funds if that's the case. And then we had people, or we saw people who maybe applied for the loan and then decided they didn't want to take it, or maybe they didn't want to take the full amount. So if you're in that third category where you paid the loan back or you didn't take your full amount, you can go back and reapply for that first draw loan again. And something else that came through with the act that was a little different for anybody who is a Schedule F farmer on their Form 1040. So this does not qualify, or this does not count at this point in time for anybody that farmed and applied or filed a partnership or a corporation or operates as a partnership or a corporation. So these are your self-employed farmers who file Schedule F on their Form 1040. So the CAA 2021 allows farmers to have a different calculation. So they use line 9, which is their total gross receipts on their Schedule F to come up with their loan amount. And the formula is just an average amount, 2.5 times their average gross receipts. Now, if it's a farmer that also has employees, he uses that same formula and then he calculates his average amount that he's paying his employees to come up with his loan amount. So Congress singled out the farmers, or the small Schedule F farmers, to add a different formula to benefit them. All right, so now that kind of covers the first draw. And I know a lot of folks probably listening in right now are really interested in what the second draw is and what that means for them and what the opportunities are. So the second draw loans opened up for anybody who has previously received a PPP loan. So you applied, you got your loan, and you've spent it. So you completely, during your covered period, have used it for the appropriate costs, and Dani's going to talk about that in a little bit later on. So again, you had a PPP, you've spent your funds and you have less than 300 employees, then one of the key factors you have to look at is, did you have a reduction in gross receipts? So the SBA kind of weighed in and said, all right, if we're going to give you a second draw loan, we want to see that you were definitely impacted from this COVID crisis. And the formula that they use is they look at your quarterly revenue in 2020 as it compares to your quarterly revenue in 2019. And if any one quarter in 2020 is your gross receipts, not your net income, your very top line gross receipts, it was reduced by 25% or more, then you qualify for this second draw PPP loan. So again, pretty key there. I know we've gotten a lot of questions as far as, maybe I wasn't in business fully for the year 2019. So when I compare my first quarter 2020 back to 2019, I wasn't in business. And the SBA has some rules where they allow you to compare it to alternative quarters within those 2 years if you weren't in business for every quarter for those 2 years. So again, there's still opportunities there. The maximum amount of loan that you can get for a second draw is up to $2 million. They did cap that. And at this point, there's only one second draw loan. So we don't know about any third draw loans yet. Now, the formula for primarily almost all the companies is going to be the same as the first draw application, which is 2.5 times a monthly average payroll cost. So again, nothing different there, except if you're in that class, the NAICS code of 72, which means you're in accommodations or food service, then you have a formula of 3.5 times that monthly payroll cost. So again, SBA and Congress realizing that that particular industry subset is being harmed pretty significantly from the COVID crisis. So they're getting a more generous formula with this second draw PPP loan. All right, I'm going to let Dani tell you a little bit about how these loans can be spent.
All right, before we get into this, I just want to quickly mention, if you do have any questions, feel free to drop them in the Q&A chat box below. We are not going to answer the questions during the webinar, so please provide us with your email address and we'll send you an email responding to your questions after the webinar. So how can you spend the loan as far as the payroll cost goes? The Consolidated Appropriations Act really did not change anything from the PPP original act. They more so just clarified a few items. So eligible payroll costs still include compensation, commissions, bonuses, payments for vacation, medical, sick leave, retirement benefits. And the one clarification, which you'll see we highlighted in blue, is that they came out and said that other employer provided group insurance benefits are included in eligible payroll costs. So this is your life, vision, dental, disability insurance premiums. And then payroll costs that are not eligible, again, it's the same as the PPP original act. And the one clarification, again, is in blue. And they said that the PPP funds can only be used for any individual employee or sole proprietor's pay up to $100,000 prorated for the period during which the payment is made or incurred. And then it also does not include employer portion of federal taxes, compensation of employees when their residence is not in the United States, qualified sick and family leave if you took a credit under the Families First Act, and then compensation paid to independent contractors.
And Dani, I think one thing too here, as far as the payroll cost goes, both the first and second draw loan require you for forgiveness to spend at least 60% of the loan on your payroll costs. So that's why payroll costs are so important, to make sure you're including everything in there because of that fact, because of that requirement. So if you don't spend at least 60% of the loan on the payroll cost, you're going to get a reduced forgiveness amount.
All right, and then non-payroll costs. So this will be the other 40% if need be. But again, it is the same as the original PPP Act, and that includes rent, utilities, mortgage interest. And the main date you need to look at here is February 15th. So the mortgages, rent, lease agreements, all of these had to have been in force before February 15th, 2020. Utility services had to began before February 15th, 2020. And then the CAA did expand it for a couple other costs that were not in the original act. And Tracy's going to briefly discuss those.
Yes, and so that was one of the changes, and also going back to what Dani mentioned about the February 15th, 2020, I know we're going to get a lot of questions, especially with the second round, because somebody might have moved their office, changed those rent agreements. So we feel like there might be some clarification out there issued by the SBA. But with what we're dealing with right now, those agreements or those contracts had to be in place as of February 15th of 2020. So the expansion that the Act did is really quite generous for these non-payroll costs that they added on. So you'll see them listed here: covered supplier cost, which means any supplies that you're using in your company. If you had a contract that you were regularly buying supplies from this particular company, then those supplies can be considered. Worker protection, if you're putting up the plastic barriers, if you're buying masks for your employees, if you're buying more tables and chairs to be able to create additional space, the 6-foot social distancing, then those costs can be counted. Ventilation systems in the air conditioner. It also mentioned property damage. Obviously, we had a lot of riots that went on during 2020, so they did throw in there, if a company was impacted and had costs that weren't covered by insurance, then it could be considered one of these 40% non-payroll costs. And then the last one, again, is really one of the most generous ones, just covered operations expenditures. So what are you spending for operations, whether it be your payroll processor, your software, or just any operations related cost will be eligible to ask for forgiveness. And this applies for all of this applies for your round 1 and your round 2 application. So if you have not applied for round 1 forgiveness, then these costs can be considered. All right, the loan forgiveness. So, there's probably, and Justin mentioned earlier on, there's about 60 to 75% of loans that there hasn't been any forgiveness put in place or has not been submitted at this point in time. And again, we've been pretty aggressive about cautioning our clients, let's wait and see what more clarification comes out. And there has been a lot more borrower-friendly clarification or taxpayer-friendly clarification that has come out. So generally, to be forgiven, at least 60, we mentioned at least 60% of the loan must be spent on the payroll cost. The covered period is one of the things that was huge with the first round. So you had a beginning and an end point that you had to use or spend these loan proceeds. The first round, they started off with 8 weeks. And if you remember early on, they increased it to 24 weeks, but we learned you couldn't do anything in between. It was either 8 or 24. Now with the act that just got passed, it's still 8 as a minimum and 24 as a max, but you can go anything in between. So if you find out you've forgiven or you've met your requirements at 12 weeks in, you're good. You can go ahead and apply for forgiveness at that point in time. Also, a lot of companies took advantage of the idle advances. That is, again, is another program with SBA where they were able to get a grant of up to $10,000. Originally, those grants were going to reduce the amount of forgiveness that you could get from the PPP loan. And again, under this act, they've taken that off the table, and now those grants are again, fully forgivable and will not impact the amount that you can get forgiven on your PPP loan. If you've already applied for forgiveness, and especially the ones that have done it in November and December, on your application, the bank would have reduced the amount that you could have gotten by your EIDL advance. Now, that doesn't mean that you've lost that now because you applied early. What's going to happen is SBA now has the protocols in place to go ahead and start refunding that money back and reimbursing that to the banks and to any of the companies that might have paid the banks for those portions of their PPP loans. So that's in place. Might take a little while to get everything, moving through the system like it should, but those will be able to be paid back. Now, new safe harbor deadlines, and when we mention safe harbor, if you've gone through the forgiveness process, you'll be familiar with the fact that, again, this program was put in place for you to keep your people employed and for you not to reduce what you're paying your people. So if you can attest to both of those, then you're going to get full forgiveness. If you cut your workforce in half, or if you reduced your head count, or if you reduce pay, you've got until December 31st of 2020 for your first draw loans to fix that so that you can get full forgiveness. Additionally, you can get full forgiveness if you are unable to operate fully because of governmental shutdowns, or because if you could not find people to work. And we've seen those instances too, where companies had the jobs, but the people were either too afraid to come to work because of the COVID crisis, or because they decided it was easier to draw unemployment. So if you fell up under those two categories, you meet some safe harbors as well, so you'll be able to get full forgiveness. That's just going to require some pretty specific documentation. All right, if you're doing a second draw loan and you're in the process, or you take your second draw loan and then you reduce your head count during your covered period, you don't have until the end of 2021 to fix it. You've got until the end of your covered period, so much shorter time frame. So again, if you're going to take the second draw loan, if you're looking at reductions in headcount or reducing any individual's compensation, then that potentially could impact your forgiveness. So you may want to take that into consideration. And one of the things we were pretty excited about getting, and if you've been following this program in the news, you'll know that the lion's share of these loans across the United States are 150,000 and less. I mean, they are most definitely the small businesses that have applied and gotten these. And quite frankly, the burden of applying for the forgiveness was originally going to be pretty significant. So SBA, again, in this last act, amended their 3508S, which is their most simple form to apply for forgiveness, to include loans that were less than $150,000. Now, they didn't back off on making sure every company would attest to make sure they've met certain factors. So if you had a loan that was between $50,000 and $150,000, you still have to attest that you didn't cut your workforce, that you used the proceeds to pay your people. And you do have to keep these records for 4 years for the employment records and 3 years for the cost or the other records to substantiate the cost. So again, make sure if you're going it on your own and filing these simplified applications that you're keeping that proper documentation to show that you didn't cut your workforce and that you did use the money for payroll. So it's not a blanket, which, several news press agencies would say, we're looking for a complete blanket forgiveness for any loan less than 150. It's not that, but it did make the process a lot easier. All right, other ideas to give you in this, in the process that you're going through the first and second draw loans. And again, just trying to deal with the COVID crisis, some things that came out with this last act. If you're in the process, and we've actually seen clients that are applying for your first draw loan right now in January, there is the ability, even though the program's ending on March 31st, for you to be able to apply for a second draw loan before the program ends. But you really have to make sure you're documenting properly and you're using that loan toward your payroll and those particular costs. Now, we anticipate, or we're hoping, that they might extend the program, but again, with what we're dealing with now, you've got a March 31st deadline. But I think with proper planning, there's a possibility you can get that first and second draw loan application in before March 31st. And contrary to what some people are hearing now, you do not have to apply for forgiveness before you apply for your second draw loan. You do, however, have to have used up your first draw loan. So you have to be able to substantiate that that first draw loan was used for payroll cost and the other costs that Dani mentioned earlier. Some banks are actually asking to show proof of that. So again, that doesn't mean you have to apply for forgiveness, and SBA has been very clear on that, but you might have to substantiate to your lender that you did use those costs. The other thing to reconsider along with PPP is SBA did open back up those economic injury disaster loans. So that was the EIDL grant that I mentioned in the previous slide. So if you're still struggling, or maybe the PPP isn't going to work for you because you didn't have the revenue drop, you can consider the EIDL grant or an EIDL loan. Just remember, only the first 10,000 of those are forgivable. If you decide to get a loan that's above the 10,000, that will have to be paid back, but it is on extremely favorable terms. Also, SBA did put some more provisions in there that you do have to be in an economic deprived area. So there are some additional certifications before or when you apply for these loans. And there is an online tool. You can just Google EIDL application or economic injury disaster loans, and it'll take you straight to the SBA application for that. And then if you're still looking for opportunities to generate some cash for the company, consider the employee retention credit. Now, again, there's still some stopgaps there. If you go back to 2020 to apply for the credit, you have to have a 50% drop in your quarterly revenue. So that's pretty steep. So in any one quarter, if you had the 50% drop, you can qualify to apply for this employee retention credit in 2020. 2021, they drop it from 50% to 20%. So you are able to apply for retention credit first quarter of 2021 or second quarter of 2021. The program currently ends on June 30th of this year. So again, consider the employee retention credit. And lastly, the employee paid sick leave. So if you remember, this is something that came into place with the CARES Act. So your employees would have to quarantine and couldn't come to work, and you were required to pay them sick pay, which you were able to recoup those funds when you filed your quarterly tax return. So according to some limits, but primarily you were able to get those funds back. And again, it was a way Congress wanted to make sure that employees were still able to get paid while they were doing the right thing by quarantining. They have extended that program into 2021, but it ends in March. So you have to make sure that if you're going to pay that, or if you have people in this first quarter, that those are taken on that first quarter payroll return. Now, last year in 2020, this program was required. So the change in this year is it's not required. So if you have an employee that has to quarantine, then you do not have to pay them the leave this year. However, If you do during this first quarter, you can get refunded back through the credits on your payroll return. All right, and lastly, before we move on, I do want to mention the 3509. So we said that we do have, the bulk of the PPP loans are going to be your smaller loans, maybe 150,000 or less. But you saw a lot in the news about the SBA really scrutinizing the loans that are 2 million and up. So if you are a company that has, or an aggregate of companies that has loans that are in excess of the 2 million, make sure you go ahead and look at the form 3509 and be prepared to address that in the forgiveness process. It is a form that the SBA went ahead and put out for these companies to prepare themselves for the type of questions that they're going to get. And additionally, along those same lines, we're still waiting for SBA to put out their game plan on how they're going to audit these loans, because whether you got $20,000 PPP loan or you got an $8 million PPP loan, the SBA has the right to look at your records to determine if that loan was appropriately handled. But again, that form 3509 is for the larger loans, and we'll be on the lookout for how the SBA is going to actually audit these things.
All right, so the Consolidated Appropriations Act did come out and confirm what we are all hoping they would, in that the expenses used for forgiveness are deductible and the forgiven loan amount is tax-free for federal purposes. So you do not have to include in income the loan you received, and you can deduct all expenses you incurred with those loan proceeds. However, the states have not conformed to the federal statute at this time. So the expenses used for forgiveness cannot be deducted on state returns. At this time, only a handful of states have provided guidance on these expenses, one of them being North Carolina, and they came out and said the amount forgiven under the PPP loan is not included in income, but they are not allowing a deduction for these expenses. So I think we're going to see a majority of the states following the same suit and not allowing these expenses to be deductible. But as I said, right now, only a handful of states have confirmed that.
So now that we've kind of unpacked all this stuff for you, that's a lot of information to take in, and it can get kind of confusing. So what are some places you can go to get some resources so you can do some additional, self-research or things along those lines? There's always the SBA's website. They've got extensive information about any of their programs, including this PPP program. It's got FAQs related to both the first draw and the provisions that were out there for that, as well as the updated provisions that will be applied to these second draw programs. The resource that we've got on the slide here is a direct page on the U.S. Department of Treasury's website. It addresses the CARES Act, and it provides some documentation that are useful for both the borrower side and the lender side. So, if you're the borrower, I'll learn to speak here momentarily. If you're the borrower trying to get a little bit of edgewise as to what it is the lenders may be looking for, this is a site that can give you information on both sides of the page. So, to make yourself as educated and as aware as you need to be for making any, important business decisions that you're going to need to make for your business. Also, there's always your accountants or your lawyers you can reach out to. If you don't have one that you call home, feel free to call us. Check out our website. We've got as much information as we can absorb and obtain and push out as we can put out there. There's an email address on the screen that you can shoot an email to. That'll go to a kind of a blanket email that'll get distributed to the team member here at our firm that can help you out the best with your question.
Justin, I will say I would definitely recommend and a lot of people, there's tons of information now on the internet about these programs. I mean, just if you type in PPP, there's just an unreal amount of information. But we're very serious when we say clarification and things are getting updated on a weekly basis. So if you're looking at an article that is a month old, it could be the wrong information. So this Treasury website here really is the go-to to find the most recent application, the most recent forms, and they have really done an excellent job, especially with this second round, keeping it updated, and the forms are on there in the background. So really would recommend going there first before you do the random Google.
So like I said, in wrapping up, if there's any questions, if you've got any questions, use the Q&A function down at the bottom of the Zoom presentation. Make sure you drop your email address in there so we got a good way to get back in touch with you. Alternatively, if you think of something, you know, it always happens. 5 minutes after this thing's over, a question pops in your head. Feel free to use that email address that's on the slide, that info@tjsdd.com. We will get back in touch with you with someone that can help you as best as possible. For those who are here, a recording will be made available to everybody who's registered. We're also going to throw it up on our YouTube page. So if somebody's got some questions and they want to check this thing out, feel free to either, you know, forward the email with the video in it, or, you know, direct them to the YouTube page. So, you know, we thank you guys for joining us, whether you joined us from somewhere here in Georgia, close to one of our offices, or out in New Orleans or Washington or wherever else you may be. We appreciate you taking the time out of your day to hang out with us. And we hope that we gave you something to think about, or maybe even gave you something you didn't know about before you started today. So Tracy looks like she may have some other parting words, and she's much better at these things than I am. So.
No, you did a great job. Sounds perfect. Thank y'all for joining us. Be looking for the information. We'll get it out to you.